Okay, I'm going to go ahead and call us to order, and it's 1:10. And we should do a voice roll call since we are on Zoom.
Yes. Commissioner LAFCO?
Yes.
Commissioner Oglesby?
Here.
And Commissioner Lopez has some flat tire difficulties and will not be joining us.
And also the guests should introduce themselves. You have to let everybody know who's on the call. Who's going to participate?
Yes.
My name is Karen Campbell, and I'm here to present the audit on behalf of Bianchi Cassavana Pope.
My name is Michael Briley. I'm with Hayashi Wayland, and I'll be assisting Kate and Karen.
Thank you.
My name is Jonathan Brinkman. I'm a LAFCO senior analyst. I'm here to support meeting logistics.
Right. Thank you. We have
And we have Kate McKenna.
Yes. Oh, yes. Kate McKenna, LAFCO Executive Officer, and reporting that we do have a quorum.
Okay, thank you. I'll open this up for public comment. If we have anything that anyone from the public would like to address, please keep it at 3 minutes, and it should be an item that is not appearing on the agenda.
And
Okay, I see no one from the public, so I'm going to close public comment at this time. Thank you. Okay, new business. We're going to consider the actuarial report on government accounting and financial reporting for post-employment benefits other than pension OPEB liability as required by Statement 75 of the Government Accounting Standards Board, GASB 75, for the fiscal year ending June 30th, 2020. And we have a recommended action on this after we receive the report.
Yes. Thank you, Chair LAFCO. Mike Briley will actually assist me in presenting the report. The information in this item is intended for use in our annual audit. So Mike, if you could please provide an overview of the report and its findings.
So, as you know, LAFCO uses the firm McLeod and Watts to provide the GASB 75 calculations, and their actuarial report is enclosed. And as stated in the executive summary, they have concluded that the OPEB liability as of June 30th, 2020 is $78,626, and the OPEB expense is $14,448. And this is going to be reflected in the audit report. Karen will be touching on that in a moment. But just kind of as a general overview, so this is the accounting pronouncements requirements to record a liability for employer post-employment benefits, health benefits for as we go along to make sure the books are reflecting that liability. And because it requires so many different factors in terms of actuarial matters, an outside expert is engaged to do that. So it's a pretty complex area. In fact, even in our firm, we have a certain individual who is our expert in this area. I am not. You hired an expert that does nothing but these reports, and Karen audits them. But she could speak for herself. But as far as I know, she hasn't got her actuarial license since the last time I met her. So you've seen these reports in your cities and your other agencies, and they're complicated. But the bottom line is there's a liability on the balance sheet as of June 30th, 2020 for about $78,000. So Kate or Karen, do you want to add anything to that?
My only note is that this is for your information only. And Karen, do you have anything you'd like to say? Okay.
Okay, thank you. Ian, do you have anything, any questions on this?
No, no questions.
Okay, thank you. We'll move on to item number 2, which is to consider the draft annual audit report for fiscal year ending June 30th, 2020.
Thank you. The draft audit as prepared by Karen and her team at Bianchi, Casavan and Pope is enclosed in the as agenda item number 2. And Karen, can you please review your findings?
Thank you, Kate. Thank you all for the opportunity to meet with you today and review the draft audit for your consideration. I'd like to give you a short overview, highlight some numbers in the report, and then ask if you have any questions. But please interrupt if you have anything as I move through my notes. We've completed our audit of LAFCO's financial statements, which was performed in accordance with generally accepted auditing standards, as well as government auditing standards. The audit opinion we issued, which can be found on pages 1 through 3, is what is labeled as an unmodified or a clean opinion. We have also issued an opinion on internal control over financial reporting and compliance, which can be found on pages 42 and 43. I would also describe that as a clean opinion. The results of our testing indicated no instances of non-compliance, and we did not identify any deficiencies in internal control that would be considered material weaknesses. In addition to that, I would like to just mention that, again, this year, there was no separate management letter issued that would be communicating to this group any deficiencies or material weaknesses noted. We will also be presenting at the full commission meeting our auditor's communications letter. And I just wanted to highlight that with you at this time. That letter includes a pretty common or customary language, but I just want to highlight for this group that, again, there were no audit adjustments required as a result of our audit. All significant transactions have been recognized in the proper period. We encountered no difficulties in performing our audit. There were no disagreements with management, and the timing went according to the planned schedule. So with that kind of as overview, what I'd like to do is highlight a couple items in the report with you. And again, please interrupt if you have any questions. You'll note that, and I'm sure in your agencies you're seeing this as well, the report continues to get longer and longer each year. A lot of that's driven by expanded or additional pension disclosures, GASB 68 disclosures, as well as the OPEB disclosures that Mike referred to with regard to your action item number 1 on your agenda. But perhaps more importantly, this year, the report includes the presentation of FORA activity. And we're going to touch on that in just a moment, but there are new financial statements included, as well as some note disclosures, and we'll highlight those. So with that, if I could ask you, if you don't mind, to turn to page 5 of your draft report in tab 2 of your package. And I would just like to call out to you a couple amounts that are reported here that I think are worthy of your noting. Certainly one thing that continues to be evident is that this organization has a positive net position. So if we go all the way to the bottom of this, of the columns for 20 and 19, the net position is still a positive value. That's not always the case when ever since the GASB 68 liability has been recorded. So that's great. You guys are doing a great job. And before I have you turn the next page, any questions on the statements of net position that we're looking at, page 5? This does include the liability for OPEB that Mike mentioned, the $78,000. That's found about the bottom third under non-current liabilities. There's the value that he mentioned is coming from your actuarial report.
No, I don't have any questions.
Karen, I've got a question. So the deferred OPEB, is that the amount that we're actually going to pay, that we'll pay by March? Is that?
Honestly, I don't know if that is your current payment or not. I'm sorry, I did not review the
I was
detail report.
thinking it was like 38 or something. Mike, do you know?
I
Are you
can,
thinking of the GASB 68,
that.
Marianne, Commissioner?
Commissioner, you are referring, I believe, to our CalPERS retirement plan. And to keep we have 2 plans, and to keep those fully funded, that's a later agenda item, not directly connected to the OPEB. As I understand it, the OPEB liability is continually funded on the balance sheet page. And Mike, I know you can help me on that.
Yeah, so let's make sure we're on the same page. Marianne, you mentioned in your question OPED, but were you talking about the pension plan?
I'm looking on under liabilities, deferred inflows and net position, under deferred inflows or resources, deferred OPEB, note 7.
Yeah, so the liability is the 78,000. The inflows and outflows would go back as components into the calculation of the agenda item we just went over. So that's where it gets fairly complex. I don't know if you want to go back into that section, but the liability right now for the OPEB is the 78,000.
No, well, I was actually, sorry, I have to go back here and find this. It's the, I saw that in March, we're going to have to make 2 payments, or by March. One was 38 something, and I thought one was 14 something. Do those ring a bell?
Yes,
Those
those
are GASB 68, I think, are they?
Yes, well, they are for the agenda item number 5, with a recommendation for payment to CalPERS to fully fund those pension liabilities.
Okay, so my question is, where do they show on this that we're looking at?
So the pension, the pension plan is the deferred pension liability, note 6 is 14,425. And there's a footnote that gets into all of that. Karen's probably going to talk about that, note 6. But we always have this timing issue between the pension report's always a couple of years behind. So what you see on this page right here, June 30, 2020, reflects the liabilities as of June 30, 2020, not necessarily what the funding is for the years that CalPERS is reporting on. So there's this continual timing difference.
Okay, I think that answers my question. I was just trying to tie it back in, trying to find out where it was on other things that I was looking at, and I didn't see dollars that match. So there's my question.
Yep.
Just trying to connect the dots.
Yeah, the dots are very hard to connect, Marianne, when you're talking about a balance sheet based on the GAAP accounting rules and the PERS pension reports. It's not a straight line by any means.
Which is always a year or 2 behind, yes. Okay, thank you.
You're welcome, thank you.
Any other questions before we turn the page? Again, I just have a couple other items to bring to your attention. So if we move on to page 6, this is your statement, the first part of your statement of revenues and expenses. And I know you review that information with this committee probably on a monthly basis. So this would show that your revenues were up year over year about 54,000. That's the first subtotal at the top of the page. Expenses were up, when we look at the bottom of that page 6, up about 137,000. And then when we turn the page once again, you'll see that at the end of the year, your change in net position, or if you will, your net income, is reflected as a loss of about 25,000 for 2020. And then later in the report, we also present your budget to actual figures for both revenue and expenses, and we'll touch on that in a moment. And so we can go through perhaps how this, whatever, $25,000 loss ended up arising. But at this point, if you don't mind, the other thing I'd like to do next is take you back to pages 10 and 11. And we're going to talk a little bit about FORA, since this is new activity. I think it warrants your attention. As you know, during the 2019-2020 fiscal year, LAFCO received $500,000 from FORA. Those funds are considered, they're accounted for as fiduciary funds. They are not your monies to keep. They are for the express purpose of being available for litigation associated with FORA as it winds down. So when we look at page 10, you'll see that the 500,000 is there, along with a couple $1,000s worth of interest income that was attributed to these funds prior to June 30, 2020. Along with about 13,000 and change in legal expenses associated with FORA activity. So again, this is new. One thing that we'll mention is this presentation is a little different than maybe what you've seen in a traditional balance sheet kind of approach. We don't have balancing assets and liabilities and net positions. So this is just a different presentation. But at the end of the day, you have $488,000 that are available left at June 30, 2020. And if we turn the page, then you'll see just the components, the chemistry of the transactions that occurred with respect to FORA for 2020. Again, the 500 initial transfer along with interest income and legal fees. So you'll continue to see this as time goes on year over year until the whatever FORA is completely ceased and the funds are either paid back or used. I also wanted to mention to you that we, as a result of the changes with FORA, we've added some language with respect to the transactions. And so if I could ask you to turn to page 13, we left this section grayed out in the report just to call your attention to it. We did ask that Mike's group, team at HW, as well as Stephanie and her team, reviewed these notes carefully to make sure that this is the tone, the tenor that you'd like to take with this information. So I definitely would ask that you, if you have any comments or changes, this is our, or in the next week or so would be our window to say it differently if that's your choice. And so again, it's just the top section up there under fiduciary fund. We're happy to modify that if there's anything you'd like to present differently.
Ian, did you have any comments on that portion?
No, I do not.
I read it, and I mean, I'm not a legal person, so from my high school diploma ability to read and understand what's on there, I would, for me, it's fine. It says what it needs to say. So as long as Kelly Donlin is okay with it, that we've disclosed it correctly, legally, then I'm good with it. But, you know, just from a person who sat there and who asked for the money and who knows what I thought the intent was, it satisfies that.
Thank you, Commissioner. I guess the other thing that's sort of connected to this, and I'm going to ask you to turn all the way back to page 40. We, as you know, have some litigation in connection with FORA. And so to that end, there again, we've kind of highlighted, we highlighted this to bring it to your attention to make sure that this reflected the activity. So I'm talking specifically about notes 9, really not notes 9 and 11. So Kate, I know when I sent the draft over, I think I indicated that, you know, it was my wish that Kelly review this as well. So hopefully this is in meets with their approval. And so again, any comments there on litigation matters? I think that's important to make sure we're all on the same page.
We will confirm later this week that there were no comments from our council. So
thank you. And then the other part, as you all well know, is that down under note 11, LAFCO has received an additional $100,000 dollars in funds from FORA to implement the administrative oversight role. So that's there. Those funds came in after year end, and they'll probably be reflected in Mike's September statements that he'll be presenting shortly. So we just call that out to you that it's come in. Let's see. At this point, I'm going to stop. Do we have any questions on anything so far? Anything else you might have noted in your review before our meeting?
I don't have anything.
I didn't have anything, Karen.
Thank you. Thank you. Then at this point, I think we'll I'll stop, and I would like to thank Mike and his team, as well as Kate and her team. You guys have a great process by which you get ready for audit, and we love it. The electronic, in this year of COVID and distanced audits, the electronic transmittal of information was efficient and well organized, and we appreciate everybody's hard efforts.
Thank you.
If there are no other questions, that's the end of my.
Okay. So Commissioner Oglesby, if you would like to, would you want to recommend an approval?
I move approval of the audit report, and with that recommendation, of course, pass it on to the full board.
Okay. And I will second that. I guess if you would take a friendly amendment, just that we must make sure that our attorney is okay with the wording on the FORA pieces.
Accept that amendment.
Okay, thank you. Second. So all in favor?
Aye.
Aye.
And probably I'll do a quick roll call on that. So it'd be Commissioner Oglesby
Oglesby, aye.
and Commissioner Left.
LAFCO, yes.
Thank you.
You're welcome. Item number 3, consider draft year-end financial statements for fiscal year ending June 30th, 2020.
Mike, can you please present this item?
Yes, I'd be happy to. Okay, so we're on June 30th, not September 30th, correct?
Yes.
Yeah. So every year we have this little dance that we do with the fact that we do the June 30th compiled financial statements, and then we hand them over to Karen as the auditor to present her audit report. And then she presents the audit report before I present the June 30th statement, and I say, well, Karen just presented the audit report on the June 30th statement. So there's nothing that I have to add for the June 30th, 2020 statements that Karen hasn't already covered. This is essentially the building blocks for the audit that you just saw and was reported on. The next tab is getting into this next fiscal year, and we'll present the financials for the first 3 months of the 6/30/2021 fiscal year in just a moment. So I don't have anything else to add to this agenda item.
Commissioner Oglesby, did you have any questions on the June 30th financial statements?
No, I just have a quick comment. I was just going to, we don't need to turn to it, but just page 8. And I appreciate the equipment summary. We try to shorten the time frame that we were depreciating those pieces of equipment, and I appreciate that being adjusted this year. And yeah, this is my second time doing this here at LAFCO, so I'm comfortable with the presentation and the way it was just laid out. And so I don't have any questions that need to be answered. They're pretty straightforward.
Okay. Would you like to move for approval for the recommendation to the commission?
If you're prepared, Chair, I'll move the recommendation that we accept this report and move it to the full board.
Thank you.
You
I will second that. So we'll ask for a roll call.
Commissioner Oglesby
Aye.
and Commissioner Leffel.
Aye. Okay. Item number 4, consider the draft financial statements for Q1 period ending September 30th of 2020. Mr. Briley, are you on?
I am. So if you turn to that section, you'll see our report. It is dated October 21st, 2020 for the first 3 months of the new fiscal year, which we're currently in, ending, well, the period ended September 30th, 2020. The fiscal year ending will be June 30, 2021. So this is basically a snapshot of your assets and liabilities as of September 30th. If you go to page 2 of our report, you'll see a summary there. Cash held in Wells Fargo. You'll see all of the restrictions on the cash that we've designated for various things, litigation of reserves, accrued leave, GASB 75, and so forth. For nothing really unusual to report in that area. Now, what the interesting part in this report is the accounts receivable. So we have to kind of fast forward to some recent activity that took place between September 30th, 2020 and today, or last week, I guess. So if you look on, I'm on page 2 of our September 30th balance sheet, you'll see accounts receivable for this fiscal year of $429,000, which is a big number. And the detail for that is in the back on page 6. So that's who owed. If you go to page 6, you'll see the list from Delray Oaks, Pacific Grove, and so forth, all the way down to the County of Monterey. Those invoices had not been paid as of September 30th. However, just in the last, I guess, 5 or 6 weeks, we've collected a fair amount of that already, and that'll be reflected in our December 31st statements. So I have a little bit more detail for you on that. Kate, I don't know how much we want to get into this, or how much the commissioners are aware of some of the timing of these payments, but at this point, I think the issues have been resolved with some of them, and we're good to go. But let me defer to you on that.
Right. Just to add to Mike's comments, the County of Monterey, the Auditor Controller's Office sends out these invoices and sent out reminders at the beginning of October. And that second reminder was successful, and the funds are coming in. Of course, the largest amount is from the County of Monterey, and they've been coordinating with our accountant and LAFCO staff just this week to make sure that those funds do get transferred. So we expect that payment to be made probably in the next week. So we're not seeing any issues here. It is interesting though, and I'm not sure, if perhaps some of this may be what we're seeing perhaps are local economic impacts from COVID matters. It's hard to say exactly, but bottom line is that the funds are coming in this fall.
So I know this, and we've got so many important things to take care of for the December meeting. So when we send out the package for the December meeting, what would be nice, I think, is if there is an update at that time, so that with just a note saying, on page 6 of the September 30th reporting, there was a number shown, but these are the only ones that are still outstanding. And I think that'll save 10 minutes off of a discussion at the meeting that we could spend on something more important.
All right, thank you. I'll do that. Mike and I will make sure that gets done.
So, sometimes it's a friendly phone call a couple weeks before a meeting saying that you're going to be acknowledged publicly if you have not paid. Do you want to have that spotlight?
No,
It sometimes helps collect. Sorry, Ian, I'm sorry.
No, I apologize, Chair. That's a good point. And so if Seaside still hasn't paid, definitely send us a reminder. You can copy me on the email. And then Monday, I'm meeting with the city manager. So, take a look to see if we haven't paid. and then send me, just copy me on it, and I'll take care of it, because like Marion said, I don't want to turn to page 6 and see my name at our next LAFCO meeting.
Hey, Ian, I've got some good news for you. So I'm looking at October's, we did an analysis from the date of this report. So you paid in October, so you're good.
There you go.
Actually, most everybody, or a good portion of that list, did pay in October. The county's still sitting there at 298,000. But Pacific Grove paid in October, Seaside paid, just the big ones, Marina Coast, Solid Ed Community Health, and then those were the big ones. Quite a few other small ones paid. So there was a lot of good collection activity in the month of October, but nonetheless, we still have almost 300,000 we're sitting on waiting for the county. But I saw the emails. Yeah, so Kate, you were copied on this. You're familiar with what was happening with Maria and Stephanie from our office, and the county's on it. And I think it's going to happen. I don't know. You may have some more recent information. This was as of Wednesday.
No, I expect that the county will pay very quickly now.
Okay. Through the chair, it's just the point being, by the time we get to the meeting, it would be nice, Kate, if we could tell the commissioners, the people that are on the list, you guys are already contacted. That way we don't even have to, no one has to ask the question, because you already told us the 4, 5, 8 people that are still left, they not come up with the funds.
Right.
Okay.
We will provide that updated information to you for the December meeting.
Perfect. Thank you.
Okay, let me wrap this up. I know you still have quite a few items on your agenda. So that really, to me, was the main point on the balance sheet. And then on the income statement, I'm on page 3 of our report. Again, you'll see all of the income recorded for the counties, the cities, and the districts, because we invoice everything in that first month of the fiscal year. All the income's recorded, and then it sits on the balance sheet as a receivable, waiting for people to pay. But when you look at the balance sheet, you'll see who hasn't paid, which is what we just talked about. But when you look at the income statement, all the income's already recorded, even though the cash hasn't been collected, because we're accounting for this on the accrual basis. So let me know if you have a question about that. All the expenses are running pretty much right in line with what we expected in the budget and what was there last year. So I don't think there's anything else I feel I need to bring up. So unless there's questions, or Kate, you want to add anything?
I would like to just note that following up on what Karen had indicated in the audit, we did receive in July $100,000 from FORA for administrative costs relating to the dissolution. And so those funds are basically being held in the county treasury and drawn down on a monthly basis as we spend that. So you see now a new item on that page 3, account number 4249 under income for admin, showing that between July and September, we basically drew down about almost $18,000 of that 100,000. So, so that's a new activity shown for this current year.
It proves it was worth fighting for.
Absolutely, yes, and it was our Budget and Finance Committee that really championed that. Thank you. And then I also want to express appreciation to Karen and Mike and their staffs for really helping us figure out how to address that 100,000 in this year's budget, and how to address that 500,000 that we received in last year's activity. So it took a real group effort to figure out the best ways to account for that, make sure that we could track funds and be properly reporting them, particularly as we plan to give back any unused portions of those funds eventually to our cities and County of Monterey. So Thank you.
Yeah, so I think just to close the loop on that, since this whole fora, I'll call it transaction singular, but I know there's lots of plural transactions in there, but conceptually the issue, if you look on page 2, Kate was just referring to the income statement on page 3, but if you look at page 2, down in the liability section, you'll see a line that says dissolution of for a legal liability, that's 2380. And as of September 30th, there's 348,000 left in there. And then the dissolution of the for admin liability is the 82,000 left in there. So we're keeping track of those monies, as Kate said, that are sitting in the county on the books of the commission as liabilities. And those liabilities are reduced as Kate mentioned, we just get these payments made that relate to whether it's a legal or an admin liability. So yeah, a lot of work's been gone into to make sure this is transparent and accountable. And so if there's any concerns or questions, please let us know, because this is really the first time. I mean, we had it in the balance sheet Karen reported on it June 30th, but we're just now kind of getting into what I would call the payment cycle for that money. So
Good.
yeah,
Well, the good news is it's not like little nickel and diming. It's going to be big chunks of money going out, particularly in the one portion of it,
yeah.
in the legal piece.
Kate, that's all I have, unless there's anything you want to add or any questions from the commissioners.
I have nothing
Even
else.
the auditor, if she has a question, I'll do my best to answer.
Nothing, thank you.
Okay.
Okay. Commissioner Oglesby, would you care to make a motion?
I move that the quarterly financial statement for the period ending September 30th, 2020 be approved by the full commission at our next regular LAFCO meeting.
Okay, and Commissioner Leffel seconds that. If we could have a roll call vote, please.
Yes, Commissioner Oglesby
Aye.
and Commissioner Leffel.
Yes, thank you.
Thank you.
Okay, item number 5 is consider CalPERS retirement plan actuarial valuation reports for fiscal year ending June 30th, 2019.
Thank you. Agenda item number 5 includes 2 reports received this past August from CalPERS, and both of them are actuarial reports that explain the liability of LAFCO for its 2 CalPERS retirement plans. Both reports, or the reports indicate that as of June 30, 2019, that the unfunded liability for the classic miscellaneous plan is $34,369, and the unfunded pension liability for the PEPRA miscellaneous plan, which is for newer employees, is about $5,798. The recommendation in this report is that our committee recommend to the full commission that LAFCO pay off those unfunded pension liabilities by March 1st, 2021. We do not yet have a more up-to-date number for what the costs are, but it would be slightly higher than the current known amounts of approximately $34,057. And that is our recommendation. If you have any questions, Mike or I will be happy to answer them.
Commissioner Oglesby, do you have any questions or comments?
No, it's reading in here, we have the money. It's a normal procedure that we do. So I'm prepared to move once you're ready, Chair.
Okay. I would suspect that we might as well just do it sooner rather than later, so it doesn't sit there and accrue interest at a rate much higher than we can earn on any of our investment money. So I would maybe as part of our motion, just say that we'd like it to be paid within the next week or so and stop the clock on it so that we're not paying them more interest.
We could time it. This does need to go to the budget and or to the full commission on December 7th. So we could make the payoff date approximately January 1st of
Or
2021.
December 15th.
Yes.
I mean, at 11 or 8% interest, it's just silly to keep paying them money for doing nothing with our money. So,
All right. Well, I will make the commitment to pay that off then, assuming the full commission authorizes it, in December. We can do the advance work and get it all ready to go.
terrific.
So you could say something like, prior to December 31st.
Yeah, it'll probably take the county a while to cut a check anyway, right? You don't cut your own?
We do cut our own.
Okay, so it's not like it has to go someplace else.
No.
Okay, good. Good Christmas present for the state. They can get their money.
Mhm.
Commissioner Oglesby, would you like to make a motion?
I move that we push to the full commission to authorize the payment of unfunded pension liabilities at our next regular LAFCO meeting, which is the classic miscellaneous plan for $34,369 and the PREPRA miscellaneous plan for $5,798. We know by the time the check is written, it may be a couple dollars more. And this motion will include that adjustment in it.
Mhm.
Perfect. I will second that. And if we could have a roll call?
Commissioner Oglesby,
Aye.
Commissioner Leffel,
Yes, thank you.
passes. Thank you.
Okay, number 6, consider the profit and loss budget versus the actual worksheet dated October 23rd, 2020.
Thank you. We receive these reports every 2 weeks from Mike's firm, and they really do help us to monitor budget activities. Mike, can you please present any highlights?
Sure. So the report is dated October 30th, 2020. So that's about a month after the report I just presented to you, the September 30th, 2020 first quarter balance sheet and income statement. So this is as Kate said, this is the report we issue every 2 weeks. And it just reflects some more expenses. All of the revenue is essentially in there from September, as I reported in September 30th. We're on track in terms of our budget projections, and very straightforward. I don't see anything there that would be of concern or should be of concern. So I just would, I guess, open it up for questions or anything else you would like to add, Kate.
I have nothing to add. Thank you.
I have no questions.
Thank you. And I have nothing. Thank you. Item number 7, consider the status report on LAFCO's response to COVID-19 impacts.
Thank you. Item 7 is a brief update for you on how LAFCO is responding to the local economic impacts resulting from COVID. And first item that we're reporting in terms of the current fiscal year is that, of course, we have frozen salaries and benefits, but beyond that, we did have a vacancy this past August, a half-time position, And we have chosen for budgetary reasons not to fill that position. We are also anticipating some minor cost savings in transitioning our meeting broadcast services to our new LAFCO YouTube channel that we're testing today. And over the course of a year, that could save $4,000 to $5,000 over our traditional costs of using the county's meeting broadcast system. We also are suggesting, at least to our commissioners, that we transition starting in our January meeting to more use of electronic meeting packets rather than paper packets that need to be copied and then distributed. So the cost savings there is pretty minor, but it's in the spirit of looking for some more efficiencies. Any commissioners that would like to continue to receive a paper packet could, of course, we would still make that available. But more important perhaps is taking a look at the future. In the next couple of months, I'll be working with Mike and his team to develop a draft budget for the coming fiscal year that begins in July. And I am anticipating that our local agencies that fund LAFCO, that many of them are going to be struggling, will continue to be struggling due to the economic impacts from COVID and the local recession. Therefore, and this is where I would appreciate your advice, I'm proposing some staff reorganization ideas that we would implement in that budget, at least on a trial basis, and at least until the local economy can really recover, which I'm not sure that it's going to be fully recovered next fiscal year. The main change that I am considering as your executive officer is to fund 3 full-time equivalent positions rather than the current 4.5 full-time equivalent positions. Some of that would be facilitated by the planned retirement of one of our staff members. And the other half of that then would be that our senior analyst would assume various office administration duties in addition to analytical duties. And some of those office admin duties would be assumed by outside help. In particular, Mike's firm, Hayashi Wayland, has the capability to help us with picking up some of those clerical duties. Overall, there should be some pretty significant cost savings. I think that our local agencies will be expecting me to recommend a budget that has deeper cuts than the cuts and accommodations that we have made this year. So I would anticipate presenting a draft budget to you, our Budget and Finance Committee, in February or March, and wanted to highlight for you now where I'm heading. We would evaluate that staff reorganization and all of those budgetary decisions after next fiscal year, see how it worked in terms of our office productivity, our workload at that time, and the budget circumstances of our local communities. So I would, this is an information item, but I would welcome any direction and thoughts that you have. Thank you.
So Kate, for me, I think the use of more of the technology, just like doodle polls for meetings and things like that, rather than have somebody that you're paying an hourly rate to call everybody and then call everybody again and then call everybody the third time. It's so redundant, and it makes me get a stiff neck sometimes when I get 4 or 5 correspondence on one meeting. I'm like, just send something out. I can read an email and then put it on my calendar. Send me a calendar invite and I've got it. And I think most of us are attuned to that. And I doubt that there's anybody that doesn't have some kind of Outlook or Google Calendar that they can use. So, I mean, I applaud if you don't need to have an admin who's just calling around all day long, 14 or 15 times on the same meeting, that is certainly a good way to save some money and to save costs. I don't think that it might be a little premature right now, not knowing what's going to happen with the particularly the water district and how much work that one's going to take. So it may be a little premature, not knowing what's coming with that one. And then I think you've got Soledad and Gonzales and some other big projects that appear to have been swirling around for a long time. But I think your indication to us is that at least 2 of those may hit in the first quarter of next year, which means that the analysts are going to be pretty darn busy. So I don't want you to cut so much that we can't analyze and get things through on a timely basis. I guess that's what I'm saying. But I see ways that time can be saved on just kind of redundant activities.
Thank you for those comments. I agree that we can make more use of technology now than we've obviously ever been able to do in the past. And so that is really important in this, would be very important in this effort. In terms of our staff workload, yes, we have major projects coming up in the next 6 months. Of course, this, we think in the next 6 to 9 months. And of course, this reorganization would take effect next July. But I know we'll still be busy at that time. That's why as part of a relief valve, it would be important to set aside some funds for potentially professional or clerical assistance during that year, depending on needs. And that way we can maintain the standards that we have right now of being very responsive to our local agencies that need LAFCO to process and deal with their issues or projects. So I don't want to lower our standards. So this is definitely a trial idea that, that I think if it wasn't for the COVID impacts to our local economy, I would not be recommending this or considering this at this early point. But I just get a sense that our local agencies are going to be looking for some deeper cuts, but still want LAFCO and need LAFCO to still be available to do the work that we do to help our communities improve, grow, develop. So,
yeah. Commissioner Oglesby?
I definitely agree with that. I understand the concern about the membership and their expenses and what they're going through as it relates to the economic development and resources coming into their communities or their districts. But I agree with you, Kate, about we need to keep LAFCO's, what did you say? A skill set high. We need to make sure we're performing at that level, which is these things come in and you push them out. So I'm not supportive of the concept of we're cut to the point where you're not able to do or keep your standards as high as they've been. And so I want you to know I support you asking the communities for more money. Because I think we talked about this last year. We still have to push this stuff back out, and some of these things with these boundary changes and these review and these reports go straight to these people, our membership's bottom line. And so to keep them healthy, we have to keep them growing as they see fit and as we process their documents and paperwork. And then I think we all know that we have a water issue that's going to come before the commission sometime next year, and we need to make sure we're on top of that in a way that the commission understands it, in a way that we can again get it back out so it can be processed appropriately. So I'm supportive of this experiment as you see it, but I want you to know that I'm also supportive of the funds that you need to have the personnel to do the job that you think you need to do. So I'm just with you on that.
Thank you. If we propose to fill 4 full-time positions, which would be basically refilling our clerk to the commission position, then best case, our budget would stay pretty flat compared to where it is now, as opposed to a reduction. So that is the safest approach to keep us fully able to respond to these needs that are from the Salinas Valley all the way to the peninsula that we have. But it was just
No, that makes sense. And if that's the plan, is to have this reduction in June of next year sometime, then I understand that. And I think we all read where you say you will have some type of savings to engage outside consultants or outside expertise. So I think that's handled when you put it that way.
mm-hmm.
So I think the plan that you have is a good plan, but we may have to hire some additional expertise on some of these items.
Yes, and it may not work beyond a year, depending on all of these various factors. But that's where I just appreciate your thoughts now before we move forward in a formal way with the ideas.
I think you're going to have a better idea after January of how things are looking. I think we'll all have a better idea. We'll see how the virus is doing through the winter, and we'll also see how revenues are starting to trickle back in or not into our area. So it's probably a little premature. I appreciate you're giving it some thought out there, and I agree with Commissioner Oglesby. We support the work of the commission. So if what it takes is 4 people, it takes 4 people. I think just like when we talked about asking for the 100,000 from FORA for admin, to not take away from what we were doing with every other aspect of the business, and make sure that we had enough assets to look at and appropriately dissolve FORA. So I think, that's, we see your list of what's coming. Some of that is, I don't know if it's pie in the sky or it's swirling around forever, or sometimes it takes so long it just solves itself and goes away because people get tired of trying to talk about it. And I get LAFCO, now that I'm into it, I see it's just a lot of talk of people just trying to negotiate and work, and some of it never happens. So, but I do believe, I simply believe that we've got to have enough people that we don't say, like some of the cities are saying around here, well, it's just too bad you're not going to get a permit because we don't have enough people. And I think that is not a good response from government. So I think that we need to do whatever we can to keep government moving. So anyway, I think it's in my mind, it's premature. We shouldn't have the discussion at the December meeting. I appreciate that we're having it here. And I think we should have it again in the January budget meeting or whenever we have the next budget meeting. And have it there, because then we'll know we're starting to prepare the budget and where we're going.
Yes, yes. We actually start preparing it in January, usually the staff, and then present it to you, our commission or committee, in February. And so one option is that I may follow up on is to present kind of two budgets, one with full staffing, at least at 4 positions, and then one at 3, and then just keep them both alive until at least we get to talk with you again, let's say in February, and see how the economy and things are going at that point. We'll also have a more clear sense then on some of these big projects that we know are coming. Are they already on us, or are they going to be landing next summer or beyond?
Yeah, no, I think that's appropriate.
Okay, all right. I think that's very, very helpful. And the last thing, well, I would never want to propose a budget where we become ineffective or, an obstacle saying, sorry, you've got to get in the queue. That's just not the way that we work here. And so it's most important is to maintain the standards that we have right now of being very responsive to our communities and helpful to do our job. So that's our reputation. And so if nothing else, we may end up going forward with a budget next year that's roughly the same as what it is now. If in consultation with you in February, we decide that's a better approach than cutting out one full-time position.
Perfect. Thank you.
Great. All right. Thank you very much for your thoughts.
And then do you have any announcements?
I do not. Thank you.
Commissioner Oglesby, do you have any announcements?
No announcements.
Congratulations on your re-election. You did good.
Yes, we're proud of you, Mayor.
Well, thank you. Congratulations to you too, Chair.
We'll move on forward.
Yeah, move forward. I think I'm gonna take a flight out of Monterey here sometime soon.
I love it. Okay. With that, I would call for an adjournment.
I'll move adjournment.
And I will second that.
Okay. Want to thank the chair for the work you've done over the last year or so, and especially our executive director and her team. I think LAFCO is in a stronger position. We had to respond to the COVID crisis just like everybody else, especially for our personnel. Kate, you did a wonderful job, and then trying to make sure that the community can rely on what we do as a commission. So just want to say excellent work, and I appreciate working with you guys.
Well, thank you so much. I feel gratitude to have such a wonderful budget and finance committee, and Mike and Karen as part of
Yes.
our colleagues. So
That's right. Yeah, both of them. I didn't mean to leave them out.
yeah.
So Mike and Karen, thank you. Jonathan, thank you. Kate, thank you very much.
Okay.
Everybody have a great weekend.
Thank you very much.
Bye, everyone.
Thank you.
All right.
Bye.
Bye.
Yeah.